You might be asking yourself, should I go for quick gains with trading or play the long game with investing? It's a tough choice. Trading can be exciting, but it's risky. Investing seems safer, but it takes time and patience. So, which one is right for you? In this video, we'll break down trading and investing into simple terms. We'll talk about the good stuff and the not so good stuff, so you can make an informed decision. Whether you're new to finance or just looking for some guidance, stick around. We'll help you find your way in the world of stocks and money. Let's get started. What is trading? Trading is like a quick game where people buy and sell things like stocks, currencies, or other financial stuff. The main goal is to make money by taking advantage of price changes in a short time. Traders keep an eye on how prices go up and down, and they buy and sell often. They use systems or charts to figure out when to jump in or out of a deal, which is called technical analysis. But trading isn't a surefire way to make money. It's actually pretty risky, and beginners should be careful because they can lose money easily. So, while trading can be profitable and exciting, it's not something to jump into without knowing what you're doing and without having enormous amounts of time to devote to the craft. What is investing? Investing is like planting seeds for the future. Instead of quick gains, it's about buying things like stocks and holding on to them for a long time, often years or even decades. The idea is to let them grow and produce returns over time. When you invest, you might get rewards like dividends or bonuses from the companies you've invested in. When you invest, you may also reap additional monetary benefits from dividends, stock splits, or share repurchases. And emphasize that less time and attention are needed since most of the time requirement is made upfront with the strong research and analysis, rather than the everyday time requirement needed with trading. Investors need to be patient because the stock market can go up and down, but they believe in the long-term success of their investments. They do a lot of research to find the right companies to invest in, looking at things like how much money the company makes and how it's managed. A good investment strategy involves spreading your money across different types of investments to lower the risk. And unlike trading, where you buy and sell often, investors usually hang on to their investments unless there's a really good reason to sell, like needing money urgently or reaching a goal. But investing isn't set it and forget it. Investors need to keep an eye on their investments because the market can be unpredictable, and news or changes can affect their stocks in the long run. Trading versus investing. Which is better? Deciding between trading and investing depends on your goals and skills. Investing is simpler. You research a company and buy its stock for the long haul. Trading needs quick thinking and market savvy to buy and sell stocks fast based on price changes. For those who want to set it and forget it, investing is great. There's a good chance your investment will grow over time. But if you're skilled and ready for the risks, trading can be exciting. Still, it's risky, so be cautious. Your choice depends on how much risk you can handle, how patient you are, and how much you know about the market. Investing is safer but takes longer to pay off. Trading can make quick money, but it's like gambling. You could lose big. Which to pick? On one side, you've got short-term traders like George Soros and Paul Tudor Jones. These are the adrenaline junkies of the financial world. They seize quick opportunities, often jumping in and out of stocks within days, hours, or even minutes. It's like they've got their finger on the pulse of the market, ready to pounce on any little blip. On the flip side, we've got the long-term investors, the Warren Buffetts and Peter Lynch's of the world. These are more like the wise sages. They're in it for the long haul. They find solid, fundamentally strong companies and stick with them through thick and thin. They're not worried about the ups and downs of the market. They're focused on the big picture and the potential for growth over the years. Which should you go for? If you love risk, you can play with short-term strategies. If you don't love risk, choose long-term investing. Who should invest and who should trade? Deciding between investing and trading depends on your time and interests. If you can spend lots of time every day studying charts, trading might be for you. But if you prefer a more laid-back approach, investing for the long term could be better. Investing takes time too, especially researching companies and their financial health. If you're up for that, investing might suit you. But if you like digging into both technical stuff and the company's background, you might enjoy trading. Conclusion. With trading, you're constantly subject to capital gains taxes on short-term gains. and you also do not get the benefit of compounding. On the other hand, investing, especially long-term investing, is not subject to as much taxation. Investments held longer than 1 year are taxed at lower rates. Additionally, with investing, the longer your investment remains strong and generates solid returns, the more the effects of compounding can work in your favor. Remember, your financial journey is a continuous learning experience. Keep exploring, keep growing, and trust yourself to make wise decisions that align with your goals. If you're interested in delving deeper into the world of investing, be sure to check out other videos on this channel. Thanks for tuning in. Raise your IQ with cutting-edge info, insights, and analysis. Visit and subscribe for free at the link below.